Good weekend, all. Ira Epstein of Linn and Associates with your weekend edition of your metal market wrap-up. And this wrap-up is for Friday, July 9, 2021. Now remember, on the weekend edition, we're going to look at the longer-term charts and try to make something out of that one way or the other. You know, one of the things I keep looking at are what interest rates are doing. And I wrote a report. I have different levels of research. Some people just get my morning subscriber video. Some take my morning Spider ETF. They do a combo. And a lot of people take my full research package, which for futures is my twice written updates along with the morning futures video. Well, I attached into my report today a report from Bloomberg as to what the Fed out of San Francisco had done in a study about pandemics and the impact as they go post-pandemic. And while everybody, and it's popular to say interest rates are going higher, maybe sharply higher, that is not what history shows in any manner. It's the opposite. It shows that post-pandemic interest rates fall. The economy, at first, you go through the transition, as the government said, shortage of goods, then the labor force comes back, you have more goods, but people during those pandemics have already spent money doing things, and they go into more of a saving mode, something to think about. Read the report. Don't take my word for it, okay? I'm giving you a synopsis there. As we take a look at gold on a monthly chart, the market is fighting a battle and has been now since the beginning of the year. You tell me it doesn't keep coming back to that 18-month moving average and hold there. Now, the overall pattern has been bearish. Lower highs, lower lows, but not confirmed. Why? Because you keep getting a month under the 18-week, then a month back over it. There's no follow-through one way or the other. This chart is sitting looking for a breakout one way or the other. When you come to the weekly chart, the market came down, fought a battle here, and is back up on a weekly basis, by the way. I want to show something. On a weekly basis, this was the low close so far, 1767.90. And if I come all the way back here to this break, 1767.70. You do realize we've been talking on a weekly chart that if the market held that, you might be going back to the upside. It's exactly what's occurring. What about the daily, not the daily, but the weekly bar chart? Well, not a trend. You've got a higher high and a lower low. That is most certainly not a trend. The battleground is, and has been for 4 weeks running, hitting the 18-week average and not moving away from it. When you look at what's above the market, resistance 1911.90. Below it, if you break through everything, first support 1723.50. Momentum down, bias up, the chart's a mess. Simplest way to put it. The gold-silver ratio on a weekly basis, the higher the number goes, the weaker silver is against gold. You need more ounces of silver to buy an ounce of gold. Look at the silver chart. Does that look bullish to you? Not to me. Frankly, this market, if it starts down from here and takes out this week's low of 2583.5, it might be saying it wants to go to the lower Bollinger Band. If it goes up, the most it can do right now is neutralize the downtrend that is in place. Yes, it's a downtrend, lower highs, lower lows, but I'll give you something that I look at. Let's assume you want to sell that 18-week average, the resistance. Where are you going to put a stop? 28.71? Way too much of a risk, $10,000 risk. I don't think you're going to get the pros to do anything off the weekly chart except potentially be sellers on breaks. You heard me, on breaks. In the copper market, battleground is right here. And China made a weird move. China today lowered its bank reserve requirement by 0.5 percentage point to spur on loans to companies to get the economy going. They feel it's slowing. They also have been threatening to sell goods to keep, and I'm talking their metal stockpiles, to control things. Their May prices for the metals fell 0.2 percentage point. So, okay, they got a little bit of a win there. But they're doing something that doesn't make sense to me. They're trying to spur business on, which will use the metals to build things, and they want to control the metal price when the demand's coming into this hand. It's a great magic act that I don't think will work. I don't know which side will work, but it's going to be pretty hard to do. Why copper? Because they consume half the world's copper, so you always pay attention to it. Is there anything bullish on this chart? Frankly not, on the weekly chart. You have the trend down, the bias up, and momentum has not turned back up. In the platinum, the market is fighting a battle for support at the lower Bollinger Band. You only stay under a Bollinger Band 5% of the time or above it that much. So this is your support zone, but that's not a reason to be long. You got a higher high and a lower low, and you're oversold. I don't see anything there. The chart that had been the most bullish is the the dollar. Coming up, I'm picking palladium because I'm already in the daily charts, but it's faltering a little bit here. That doesn't mean it's turned down. It's faltering a little bit. It is not in overbought territory. It's still basically in pretty good shape when you consider everything. So you put it all together and you have an interesting market situation of questioning what the interest rates are going to mean, what the metals want to do with the inflation that is still considered to be transitory. If you look this week at our JOLTS and jobs data, there's plenty of jobs out there to be had. If you look at the inventory reports that came out just, I think it was today or yesterday, you saw that we're building some inventory. Well, that's because the supply chain is starting to fill again. And that's the Fed's argument about transitory. Once you get the goods, you won't have that transition. By the way, one final note here before I show you what we've got. You got to read that Fed report that Bloomberg had talking about also what happens in jobs, labor, and inflation after a post-pandemic. Fascinating report. I sent it to all my clients today. If you take a look at futures or ETFs, I want to be the guy that you wake up in the morning and say, I wonder what Ira thinks. What's he covering? Now, I cover 40 charts in each, my ETFs and my futures market paid subscriber video. The rationale there, I'm covering all the sectors that I think you want to watch. I'm doing it because that's my goal. I want to be the chartist that you say, I want to know what he thinks. I'm bullish, I'm bearish. What is the man saying on that chart? Why is he saying it? Well, that's what you get. For the combo subscription, you're getting 48 videos a month. 6 futures, 6 of the ETFs, 5 daily of each typically, and then on the weekends you get my weekend edition. I cover all these in the futures, I cover in the ETFs all this, and it's inexpensive. You start the subscription, and by the way, it is not, you can quit whenever you want. $16.90 to get those 40 videos. Go out and try to get somebody to give you that information for that. I don't think you're going to get it. Number two, I don't think you're going to get the quality you do from me. Go to our website, take a look under the word research, decide for yourself. I'm Ira Epstein. Have a great weekend. I will talk to you all Monday.